Greetings. My name is Rivan Anwar from Institut Teknologi Bandung School of Business and Management. Today, I will be presenting my thesis about how bubble bursts affect Indonesian stock traders in the initial public offering or IPO. This presentation will contain background, research questions and objectives, literature review, methodology, data findings, and conclusions. Background. The first part is background. Why people trade? Trading provides the opportunity to make a lot of money quickly. Owning a stock is a great way to store savings in a profitable way and to protect against taxes and inflation. While also maximizing investment income, the stock market, there are traders who seek out stocks with the potential to increase in value quickly, and investors who seek out stock of firms with strong value propositions, market performance, and long-term prospects. IPO system. When a company offers its equity to the public for the first time, it is called an initial public offering or IPO. An IPO allows a corporation to raise equity money from general public, while private investors can realize rewards from their investment. IPO can be a good choice for traders as it offers more cheap shares with relatively strong company condition. Risk in IPO. Investing in an IPO offers enormous risk. One of the most threatening risks is the overvalued IPO. This is related to a term of what's called an economic bubble or a bubble burst. IPO shares undergo dramatic price increase as investors start to buy above what may seem to be a reasonable pricing. According to the notion, after a sharp increase in the market prices, there will be a sudden crash. Investors will sell their overpriced assets with little to no warning of when it will happen. Research questions. How is bubble burst happening? Why is the bubble burst happening? What impact caused by the bubble burst toward the stock traders? What do stock traders usually do when they experience this situation? What should companies and investors do to overcome this situation? All these questions are related to this objective. The first one is to identify reasons that cause this phenomenon, to identify what impact caused by towards the investors, to investigate how stock traders do in this situation, and to know what companies and traders should do to overcome this phenomenon. Literature review. Based on from an economic professor from Stanford University, Mr. Peter Kujis, a bubble is where investors buy an asset, not for its fundamental value, but because they plan to resell at a higher price to the next investors. A price spike for an asset that is quickly followed by a decline is known as a bubble. Bubbles develop when the price of an asset is not supported by the asset itself, but rather by the excessively optimistic actions of investors. By Elliott 2020. Past incidents in Indonesia. Gojek and Tokopedia, two of Indonesia's top startups, have merged to form a new company called GoTo, worth 18 billion. GoTo plans to have a dual listing in the US and Indonesia with the goal of achieving public market valuation of up to 40 billion. However, the stock price of GoTo has decreased by 6.64%, below the starting price, leaving investors with significant loss. There are several past research by Richard 1991 investing in IPOs at the end of the first day of public trading and holding them for 3 years would have left the investors with only 83 cents relative to each dollar from investing. The second one is by Subramanian in 1998. Investor psychology such as overconfidence, information cascades, and herding behavior can contribute to the formation of bubbles. Investors are more likely to participate in IPOs when they perceive that they can sell their shares quickly and make a profit. Methodology. There are two types of data, the primary and secondary. The first one is the primary data that I will be using by qualitative method. The primary information will be collected using a structured interviewing strategy to Indonesian professional traders. Since the phenomenon cannot be directly viewed, an interviewing strategy was selected with only consented professionals that had a prior encounter with IPO bubble. The objective of doing a one-on-one interview is to get more data in a descriptive term. The similar method had been used by Teufel Lawrence in his study of investment decision stocks in 2016. He said that the descriptive research approach was chosen because it allowed for the collection of a large amount of data through description, which was helpful for identifying variables and speculative constructions as well as generalizing the results. By Lawrence, 2016. Data analysis. The reduction, summarization, categorization, and interpretation process are used to analyze the acquired primary data using the help of qualitative software called Atlas TI. The secondary data are used by qualitative and quantitative methods. Secondary data will only be used as a supporting and basic data, mostly consisting of statistics from past research. It would be the basic data for this research as the previous incident had more promising and complete data. Findings. The IPO bubble had been a serious phenomenon in the Indonesian stock market. History shows several IPO bubbles that affected investors and companies. The nearest and notable phenomenon was the 2020 Buka IPO and 2021 GoTo IPO. From the members of the board of each company, a conclusion had been made. The Indonesian IPO bubble was triggered by a mix of causes, including the expiration of the lock-up period, early investors collecting gains, liquidity needs, and lack of investor loyalty to the stock market. While these factors were outside of the company's control, they contributed to an unbalanced stock market. As you can see, both of the recent IPO bubble are trading in their below their starting price. The GoTo and the Buka. From the interviewing result gathered using the Atlas TI, it all generated this framework. The first one is the impacts for company and investors. Also, there are signs that lead to causes. As you can see, the signs there are overvalued, high consumption, price increase, rush exit that will lead to causes which over optimistic of investors, hype, inadequate investor psychological, short-term investment, early stage of public, minimum investing knowledge. There are many impacts also, traumatized, earners loss, economic instability, overvalued. Here to the company, overvalued, will not have the similar growth, unsustainable growth, and bad impression. Also to have the strategy for companies that to regain investor trust, find sustainable source of fund, arrange business model, improve performance. Also for investors, minimize loss, take advantage, analyze trading indicators, diversify portfolio, evaluate continuously, and shape the psychological. Based on the based on the participants' view, IPO bubble is a serious phenomenon that causes many traders a great loss of money. According to participants, most significant factor to bubble is the hype and high consumption. IPO created trends and hype around investors. Successful companies with great management as well as their great condition of financial reports entering stock market will hypnotize investors. Little do they know that the company is still in their early stage of IPO with little to no fundamentals towards the stock market. The next thing they know, the company shares prices fell down below. Starting price will create a domino effect in which investors started to panic selling their shares, and this will result in a more price fall. There are several other causes that contribute to an IPO bubble, including inadequate investor psychology, leading to impulsive decisions, minimum knowledge resulting in inefficient evaluation analysis of over-optimism among investors, leading to speculation, short-term investment causing market instability, media created hype and trends in the early stage, where many companies lack strong for the public market. IPO bubble's impact is significant for both investors and companies, resulting in enormous loss. Investors lose their investment profits, while companies miss out on raising capital through IPOs. The bubble burst creates a liquidity problem, with few investors willing to buy shares from those exiting the market. Many investors become traumatized and avoid the stock market in the future. Companies suffer negative public impression, losing investors' trust and failing to meet market expectations for growth. Second one is the such situation investors often cut their position to limit further loss. They have a tipping point where they exit to market to minimize loss. To survive, investors should consistently evaluate and analyze market before and after entering. This can be done using indicators like MACD, VIR, and ROI. Additionally, checking the price book value helps determine if a market is overvalued. Investors can also benefit by adopting a contrary approach or investing in the opposite market to gain profits. Both company and investors can take preventive measures. Companies should improve their fundamentals to regain investor trust by expanding their business, increasing income, and cutting expense. Seeking sustainable funding source is essential, so instead of relying solely on investors' money. Investors should also diversify their portfolio to minimize market risk. They should also work on shaping their psychology, behavior for better self-control. Learning and mastering evaluation and analysis are crucial tools for investors to navigate the market effectively. There are some limitations, which of it is that this research was unable to include a greater number of participants due to the time and resource limitations. Conclusion. The research study on the impact of bubble bursts and Indonesian IPOs reveals significant consequences for both investors or traders in companies involved. The bubble burst occurs when there is an unsustainable surge in demand for a certain asset, leading to overvaluation and subsequent rapid declines in price, resulting in enormous loss of investors and missed out opportunities for companies to raise capital. The root cause of the IPO bubble lies in the reliance on retail investors who lack proper evaluation, analysis, and long-term commitment to the market, leading impulsive decision-making. To survive, there are some ways investors should evaluate, analysis, diversify portfolios, and shape their behavior. To conclude this presentation, I would like to state one of the quote from Warren Buffett. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. That's all from me. Thank you.